Here we have our quick hit segments, and here we have our quick hits. 4 ideas, 4 things that have been in the news lately that I think individual investors may be wondering about or talking about at the dinner table or with their next door neighbor. And here they are right here. Number one, Canada to impose tariffs on Chinese EVs. That has been, I guess, the topic du jour, as we say, for a little while now. Canada increasing or putting tariffs on electric vehicles because we import, as we're going to see shortly, so much from China in the EV space that they felt it was important to be competitive, that they had to do that. Canadian big bank earnings recap, we'll go over those. There's definitely, I guess, a dividing line between the 6 major banks in our country. We'll highlight that. Number 3, banks in mortgage rate war. And that shouldn't come as a surprise. With interest rates as high as they are, it's difficult for the banks to earn mortgage business with rates so high. Number 4, Canadian household spending per person is coming down and is at a recession pace. And we have a chart that clearly shows this. And that is obviously contributing to a slowdown in overall GDP and something that the Bank of Canada, as I said earlier, is focusing on. So let's go to our first quick hit, Canada to impose tariffs on Chinese EVs. And our first chart, we can pull it up here, clearly shows that here we have China is our imports, where Canada imports its EVs from. You can see China over, well, almost 1,300% EVs coming from China. The next biggest country looks like Mexico, 500%. 2 countries where I guess labor is quite cheap, and people unfortunately don't get paid as much as they do here in Canada and the US, and obviously China and Mexico competing with respect to their EVs based on that, a lot to do with that. Obviously, the cost of putting together an EV may not be as much as putting it together here in North America. And so overall, they're able to bring EVs into Canada at cheaper prices, and makes it more difficult for the big 3, as we all like to say, GM, Ford, and now Stellantis, to compete on electric vehicles. So EVs, we're going to see some tariffs put on EVs, electric vehicles, and that is beginning, I believe, right away. The second quick hit that we have here are the Canadian Banks recap. And the Canadian Banks recap, as I said, clear distinction between 3 of the 6 big banks in Canada and the other 3. Right now, our top performing banks in this country, Royal Bank, which seems to be always the top performing bank, our largest bank in the country. And here you have a chart on Royal Bank. It's doing extremely well, and you can see its earnings were phenomenal. Their recent acquisition of HSBC assets has really helped the Royal Bank and their earnings report. Next bank stock we have here, a chart on as well, is National Bank. National Bank, again, another great chart. And again, another fantastic earnings report that we just received towards the end of August. And dividend has been maintained at in and around 4% for quite some time. It's now pulled back below 4% just because the stock has moved so much higher. And the third big bank in Canada, which is our second, second smallest, or our 5th largest bank out of the 6, which is CIBC, they too are doing extremely well. And it's no coincidence, in my opinion, that all 3 of these banks have done extremely well on the back of good Canadian earnings. The portion of their earnings that came from Canada versus outside of Canada did extremely well. And CIBC, Royal Bank, and National Bank. CIBC and National primarily do business in Canada. CIBC obviously has business in the United States as well and outside of Canada, but predominantly a Canadian bank. And Royal Bank, a huge Canadian business. The 3 that are starting to struggle or struggling a little bit are our other 3 banks, and you can obviously guess what they are. First one, Bank of Montreal. You can take a look at this chart. Obviously, very different chart than the charts I just showed you from CIBC, Royal, and National. Bank of Montreal is having difficulties with their loans, commercial real estate in the US, giving them some challenges. Investors are a little concerned by that. They just missed their last earnings expectation when they reported earnings in the second half of August. And they've been talking about setting aside even more money for bad debts for defaults going forward. And that really hurt the bank and caused a lot of individual investors to sell some of their shares. The next chart we have, TD Bank. TD Bank stock a little bit better, had a bit of a dip not too long ago. And again, they're setting aside a lot of money for bad debts and their situation, the money laundering situation in the United States that they're a part of. They had a money laundering scandal at TD inside the US. So this wasn't in their Canadian banking, but it was in their US banking. And they have actually set aside approximately $2.5 billion as money to perhaps pay if they're anticipating some sort of fine out of the US government. And they've set aside money. And I think they've done that to, I guess, provide some clarity. Maybe investors are liking the clarity with that. And we've seen the stock price rise back above $80 a share. And lastly, Scotiabank. Scotiabank doing a lot better recently, as you can see by their chart here. Scotiabank is doing a lot better. They've changed management. They've undergoing a restructuring. And I think that has definitely helped. But still, they too have set aside more money for bad debts. And so, again, something to consider if you're looking at the banks as an investment. I think you want to keep an eye or keep track of which banks are doing well and which banks are not doing as well. Third, so third quick hit, third out of fourth quick hit is this banks in a mortgage war. The idea that big banks are fighting for your money, for you to borrow with them. And it's interesting, with interest rates as high as they've been, mortgage business has slowed. There's no doubt about that. Lending by the banks in Canada has slowed down, and that's affected their profitability. Keep in mind that as the economy slows, so do banks. Being the bloodline of every country, your major banks will slow as the economy slows. But I think this next chart I find quite interesting because you'll notice that these are the lowest nationally available mortgage rates that we were able to find. And you'll notice here that there are no big banks there. Well, actually, that's not true. You see Scotiabank at the bottom there on a 5-year hybrid. They tend to be the lowest rate, but most of the other names are smaller institutions, whether they're trust companies or other smaller financial institutions in Canada providing mortgage rates. And they tend to be better providers of mortgage rates. Lower rates tend to come from outside of the big banks here in our country. So I thought that was another point, another good headline I saw in the news that big banks are fighting for your mortgage business. And that was actually talked about by the CEO of Royal Bank. And lastly, our last quick hit, possibly the most important one, is households. Canadian household spending on a per person basis is falling. And it's actually falling to recessionary levels. We're not seeing the spend that we once did. Again, going back to this productivity situation the Bank of Canada keeps talking about. We're seeing more spend as a country because we brought in more people to the country, but on a per person basis, we're just not seeing the spend. And that is worrisome. That should be worrisome to our government. It is definitely worrisome to the Bank of Canada. And our last chart, you will see clearly shows this. On the far right-hand side of the chart, you're going to see, there it is, that the spending has now gone below the flat line or the zero mark. And when we see that, if you look back in history to the left of the chart, you will see that usually that causes a recession. So is a recession in the cards here in Canada? Don't think we're out of the woods yet. If I had to say, I'd probably say no, that a recession will not happen, that we will skirt by without a recession, but definitely something to consider, especially as spending on a per person basis continues to slow.